Hello, everyone, and welcome back to the Hypernest podcast. Today, I have the incredible pleasure of having here Mark from Dominion, and we're going to discuss about tokenization of commodity, and more precisely, tokenization of silver and how to make silver becoming a DeFi primitive. But before we get specifically into the weeds of it, I would like to ask Mark to introduce himself, tell us a little bit about him, how you get into silver, and where the idea of Dominion come from.
Yeah, sure. Thanks for having me. Appreciate it. So I'm Mark. I'm the founder of Dominion. I've been in Web3 crypto for about 7 years at this point. And I've held various roles across crypto, working with different projects, working for a private members community for a while as well. And that was kind of where it all started. When you start understanding the monetary system, you start to realize hard assets like Bitcoin, gold, silver are super important. I always found silver a bit more attractive than gold. I think gold's still got that boomer coin kind of mentality to it. So silver was always something I thought was undervalued. I still think it's undervalued today. And I was always pretty interested in it. There's a lot of tokenized gold products on the market. And I think silver is massively undervalued.
Well, I completely agree with you. I think you're preaching to the choir, because I've been also investing in silver and not in gold for many, many years. But for people that are maybe less familiar with these precious metals, maybe you want to tell us a little bit more, what is your thesis for investing in silvers in 2026? So why carrying?
Yeah, I think if anything, the thesis for investing in silver just continues to get stronger. I think what most people don't know about silver is that majority of the time it's a byproduct. So there isn't too many silver-only mines in the world. A lot of silver is actually mined when people go to mine copper and gold and things like that. But ultimately, the biggest driver is demand, and silver demand is huge. Silver is used in EVs, it's used in solar panels, it's used in basically anything that touches AI or tech will have some relationship with silver. So for that reason alone, we all know what's happening with AI, the CapEx expenditure. Jensen Huang from NVIDIA expects the AI build-out to cost about $90 trillion. I would say if that's even close to being accurate, then the amount of silver that's required is going to be enormous. So there's a huge demand side. And then obviously with supply, it's not as easy as other mining metals to just turn on silver mining. So supply is kept steady, demand is growing astronomically.
Absolutely, I'm with you. And I think that you've been touching on such an important topic. So many people don't know that silver is used in, as you say, solar panel, electric vehicle, and so on and so forth. And in the last period, I've seen that the demand in solar panel is decreasing over time because they're building in slightly in a different way, but actually is increasing dramatically for electric vehicle and AI. That basically is offsetting and still creating a structural deficit. It's kind of 6 years that there is a structural deficit. So essentially, we are having a shortage in the end of silver. And as you say, it is not that you flip the switch. So if the price double, the production doesn't double.
Exactly.
Right? It cannot catch up at that speed.
100%. And you're right. Yeah, we've been in a structural deficit for 6 years. I expect it to continue. And also probably expand because, we are starting to develop technologies in space and things like that. Commodities are going to be a big business for space exploration.
Very cool. I think that another interesting information that I found out that usually not a lot of central banks store silver, right? But in the 2025-2027 plan, Russia started to allocate a relevant amount of money, I think about $1 billion, specifically on silver for the first time. So it seems that a lot of things are moving, and also silver, it's becoming to be recognized also apart from the utility, also as obviously a store of value or something on the side.
Yeah, 100%. I think one thing people don't take into consideration when they look at investments is if you look at silver, for example, India imported 25% of all mined silver in 2025. Now, why did they do that? Well, one, because global trust is at an all-time low. So if you know you need silver for the next 5 years, you can't rely on trade relationships because trust throughout the world is failing. And these trade agreements are getting reneged on every single month. So countries are becoming very more selfish and only self-interested. And that means that they're hoarding commodities in a grander scheme than we've ever seen before.
Yeah, absolutely. I also have seen that it's increasing dramatically the demand for physical even silver. So in essence, everyone is stocking up commodities one way or another, probably also due to, let's say, the fragile, let's say, balance that we have in the global economy, I guess. You have been observing these, you have been commenting on these a lot in your post. What do you think is broken in the current commodity market?
Well, I think you've got a few things. I think the world still relies a lot on paper markets, which are inherently flawed. You see that right now. I think there's about 200 paper contracts to every ounce of silver. So what happens is there's massive supply issues, and that's why we see short squeezes from time to time. But there's real price suppression as well. On top of that, if you look at physical silver, there's a real challenge with physical silver globally in that it trades at different prices depending on where you are in the world. So if you were to buy physical silver in the UK, you'd probably pay 40 to 55% above spot price because you've got to pay VAT, you pay the dealer premium, and then you have to get it delivered to you. But then when you sell the product, you get whatever value they offer you. So it could be less than spot if you've not looked after it properly. You know, if it's a bit faded, they're going to discount that. So there's a real imbalance. You've also got the problem of storage. Storage is a massive cost. And when you factor in the fact that, you know, a physical metal, if you've got bars of silver sitting in your house, it doesn't earn any yield. So you've got to worry about the resale value, insurance, storage, and then you're not earning yield on it, then there's a real problem with physical commodities. But there's a huge benefit to being able to hold physical commodities to protect you against inflation. It's obviously a hedge against fiat debasement, and it's a store of wealth over the long term. So it's really trying to balance that. I think the paper markets are going to blow up eventually. I think we're seeing, you know, fourth turning vibes with the commodities markets. There's a lack of trust in ETFs, lack of trust in COMEX, all these things. And I think that's where tokenization really comes into the fore.
I see. In particular, when you have maybe tokenization one-to-one, right? Because as you said, paper versus physical is a structural issue. I mean, it's not clear what is this ratio, right? But someone say 200, someone say 300. So it means that everyone will redeem today, there will not be enough silver. It's similar to a classical bank run connected to a fractional reserve, basically.
Yeah, 100%. And basically, this is what keeps happening, especially in London. We saw it. And this is why banks are actually taking delivery of their physical silver. That's why India is important so much. That's why China's buying so much. That's why Russia's buying so much, because they don't believe that when these contracts come due, the metal actually exists. That causes a massive structural problem, causes a massive imbalance in price, but also it's basically fraud. They're rehypothecating to 200, 300 times, even more than a bank would rehypothecate cash. That never ends well. And it won't be JP Morgan that suffer. It'll be the small people that have, you know, a pension or an investment product. It'll be those people that end up suffering.
It's nice that you mentioned about JP Morgan, because I think that JP Morgan settled like 920 million with the CFTC and the DOJ after 2020 for spoofing of precious metals over 8 years. And there were a lot of other international banks involved in, let's say, different, let's say, spoofing of metal prices, including UBS, Deutsche Bank, HSBC, and so on and so forth. Did you look into it? Why do you think this is happening? I've read several, let's say, theories, but I'm not sure what will be the dominant one.
Yeah, I think like you said before, international banks don't hold as much silver as maybe gold. I think the incentive to suppress the price of silver is massive because the industrial demand is there. You know, if you're building out solar panels for America, you want the resources at the cheapest price. I also think you know, if you look at the US, for example, they don't have a lot of natural resources in the silver field. They have to import it from other countries. The advantage is if they keep prices low, then their imports stay low. I think basically we've got to a point in the globe, fourth turning, again, I keep mentioning it, but it is very fourth turning, but people aren't surprised anymore. If you read a headline tomorrow that HSBC or JP Morgan will be fined a few $1 billion for fraud or for facilitating money that they shouldn't have touched or whatever, it doesn't actually come as a surprise anymore. JP Morgan probably made $100 billion on their silver trades. They pay $1 billion, maybe $2 billion in fines, and then they just move on. It's such a small slap on the wrist. It's just, it's just the problems with modern finance, with modern banking. That's why we saw 2008 happen. These banks understand that they'll get a fine, they'll get a slap on the wrist, but they'll move on. And I think because of how fragmented the silver market is across the globe, it's a lot easier to manipulate than, for example, gold, which central banks hold. So if JP Morgan's trying to impact the gold market, they have to think about China. If they're impacting the silver market, they're probably worried more about London. I know who I'd rather fight with if I'm JP Morgan.
Very interesting. But I found it extremely fascinating, how we always talk about manipulation, in our small blockchain world. But in reality, a manipulation happens at scale, in trillion-dollar markets.
Exactly. And I think that's one of the eye-opening things about, when you do cross into RWAs from general crypto, is you realize the scale and the size of the pools of capital that exist outside our crypto echo chamber. I firmly believe that crypto's going to catch up and, Bitcoin's going to go to multi-trillion-dollar assets. But I think day to day, you do think that, crypto's manipulated, there's all the theories, but actually the entire world runs on games and everyone's trying to find edge. And if you're big enough and rich enough, you can break the rules because, you're not going to be closed down. No one's going to go and close JP Morgan down.
Yeah. All right. Well, I think we have provided an incredible introduction to this magical world of silver. And now it's time to discuss about Dominion and, of course, the SILF token. You want to give us an overview of the protocol and the token, of course.
Yeah, so the silver token is backed one-to-one by physical silver that we own ourselves. So a lot of tokenized assets are like a license agreement or a lease agreement. They borrow. We actually buy and hold the silver on our own balance sheet, and then we tokenize after it. I think that's a really important distinction to make, is that we own the silver first. Because again, similarly, a lot of RWA protocols sell tokens and then go and buy whatever the asset is. We buy the asset first and then issue the token to make sure that we're always over collateralized. Our token will provide yield. It'll provide 24/7 liquidity, which is super important in the modern world. I think that's another issue that modern commodity markets haven't tackled. And on top of that, there is a lot of other benefits of holding the token. One, you get silver exposure, and then also long term we will have borrow and lend markets, which I firmly believe DeFi lending and borrowing is going to be a massive multi-trillion-dollar market in the near future. Again, because we don't trust the traditional financial institutions, and silver will be an amazing collateral to pledge.
Absolutely. And where will you be? Who will be the custodian of this silver? So where the silver will be?
Yeah, so right now we've started buying our silver right now. It's just on a small scale for our proof of concept, and it's held in third-party vaults managed by Sprott Money, which is institutionally known, world-renowned brand. Long term, as we start to scale and increase our holdings, it will go into Brink's custody. Brinks are one of the biggest vault partners in the world. Anyone that holds institutional funds, any big art dealers, any big gold holders, silver holders, they all use Brinks. Not only because Brinks are secure, they're in very safe and secure jurisdictions, but they also have amazing infrastructure to facilitate proof of reserves, daily attestations. You can go and visit the metal if you want. So yeah, Brinks long term will be our number one custodian.
I see. I think you mentioned another important point, maybe one of the most important, the proof of reserve. So how are you thinking about proof of reserve today and in the future?
Yeah, so right now we have the proof of purchase, proof of delivery notes uploaded on our website, so you can access them, you can see them. We download regular statements just to prove that it's constantly there and the balance is what it says it is. You can see how much we bought, when we bought, what quality it is, things like that. Long term, obviously that has to scale, and long term we will use like Chainlink proof of reserve. Chainlink's probably the best in the industry for verifying proof of reserves. It allows MD to go on chain and verify the metal is where it says it is, and there is as much as we say there is. That's super important to us. RWAs are live and die by trust and transparency. And we think, don't take my word for it, use on-chain proof via Chainlink. We'll also work with a company called Hive. Hive not only help to show that transparency, what Hive also do is they log every proof of reserve, proof of purchase, proof of delivery document on chain forever. So there can be no manipulation. They get it straight from the source, it's uploaded, and then anyone can go and vet any document you want, including our audits as well.
Okay, I think you briefly touched on safe jurisdiction, but in what jurisdiction will you keep your silver right now and in the future?
Yeah, so right now it's in Canada. We think North America is probably the best place for it. We do have a partner in Singapore also, so we've not started using them. We have an agreement in place if we ever need to. I truly believe in decentralization, so decentralization of where we store the metal might not actually be a bad idea long term in case, something happened in a jurisdiction. But we feel pretty confident that North America, Canada and America in particular, offer the safest place. So right now we've got metal in Canada. Long term, it will be Miami and Texas in the US. And we might add Singapore long term as well. But for us, that is another element of trust. When you speak to large banks, large institutions, large family offices, they want to have conviction that your silver's not going to be seized. Holding it in some region that's maybe unstable just doesn't give them enough confidence that a government's not just going to come in and seize all your metal.
Yeah, absolutely. I think I've seen some favorable regulation also in Switzerland, for example. I mean, Singapore, as you said, very good. But definitely makes a lot of sense also to have a little bit of geographical distribution at some point, right? Because you never know, right? Everything is okay until it's not.
Yeah, 100%. I think we will add Switzerland long term, but the regulation's a bit more complicated in Europe, and we want to make sure we do want to be regulated and compliant first, and it's just a little bit easier in North America for now.
Okay, talking about specific to silver on chain. So I think that today we have about 6 billion, but I say 5 to 7 billion of commodities on chain. 98% is basically gold, and we have a small percentage that it's silver, I guess about around 500 million from the last data that I was checking. And it is connected to probably Kinesis silver.
Mhm.
So that I think they run also on their own chain, as far as I know. So what will be the difference or similarities with Kinesis compared with Dominion?
Yeah, so Kinesis is pretty much the only tokenized silver product. There's a few others that are very small market cap. There's actually one in Dubai that's trying to tokenize just 1 bar of silver, but it's a giant bar, but total different product. Kinesis operate on their own blockchain. It's kind of closed loop. To be honest, I think might work for them, but what Dominion really wants to do is open access to everyone. So that's why we picked a blockchain like Solana. Easy to use, it's cheap, it's accessible. Solana has some of the best tech in the space, in my opinion, as well. So yeah, Kinesis are doing well, $350 million market cap, I think, there or thereabouts. But for me, I think building on your own blockchain, it just closes people off. It's not as easy to get in and out. It's not quite as accessible as a product on a public blockchain like Solana.
Absolutely, and this is what I definitely love about Dominion, right, and the SILV token, because if you want to build a new DeFi primitive, obviously you want to have usability, accessibility, integration in the end of the day. But obviously you do have an advantage if you are in an open ecosystem on a public blockchain and you have integration. And in addition to that, I think that your plan is to provide yield to the owner of the SILV token. Maybe you want to explain a little bit more about it, because I think it's one of the most transformative idea around the product.
Yeah, I think for me that's what tokenization should be about, is adding liquidity and different attributes to an already solid asset. So whether it's gold, silver, copper, Tesla stock, whatever it is, the whole point in bringing it on chain is verifiability, transparency, but also the composability and DeFi. We want to provide yield to the token, and we do that in various ways. Most people might understand this, might not, is that tokens generate fees in various ways. So trading, every time somebody buys and sells, there's a fee. If it's used in borrow and lend, there's fees involved. And we want to take all those fees and actually buy more silver, Before we distribute any yield, we want to buy more silver. And then we want to pay our yield in silver tokens to people. So not only do you buy and have exposure to silver, you actually earn silver for holding the token long term. And we think that's more attractive than cash yield. And the reason for that is if the money supply is growing at 8 to 10% every year and you're getting paid 6 to 8% yield, you're actually earning negative yield. But people don't think about it like that. We think people will wake up to that fact in the years to come. Right now, for example, if you're in the States and you're buying a treasury at 4.5%, real inflation's probably about 8%, you're actually losing money. And we think a silver yield is way more valuable than a cash yield.
Of course. Well, makes complete sense. And you mentioned several ways to capture this yield, right? And I think we can probably divide between yield that would be somehow generated because of the internal mechanism of the protocol per se, and yield that potentially can be generated leveraging other DeFi protocol, like, I don't know, AMM, lending, as you said, and so on and so forth. So where do you see, or basis trade, so where do you see are the most important sources of yield for SILV?
Yeah, I think so. I think it's a good question, but I actually think it changes as we scale. So I think in the initial stages, we're going to generate a lot of fees from our liquidity pool because it'll be quite small, it'll be tight, concentrated liquidity, and we'll see a bit of volatility in that pool because it's a small pool. As that starts to grow, that then reduces the volatility, and we actually see the volume per TVL drop, but that's natural and that's just what happens. But what we could do at scale is then start to step into the other markets, vaults that allow borrow and lending, looping, for example. We then actually can create our own markets on perp stexes, which generate substantial fees, and that's without us even trading ourselves. So one of the things I said at the start was we always want to be over collateralized. By being over collateralized, it actually gives us a lot of options. Not only can we do basis and delta neutral trades on chain, we can actually do one off chain if we're over collateralized as well. And that just feeds into the business. And ultimately, the business's main job is growing its silver treasury. That's what we try to work every day to generate revenue, to buy more silver, so that anyone that holds equity in our business has more silver per equity over time, similar to the Michael Saylor strategy model. So at small scale, trading fees through buying and selling, LP fees will be a big part of our revenue. That'll slowly grow, but actually tail off as our TVL grows. But as our TVL grows, we'll start to be involved in borrow and lending, pledging collateral, communal vaults, things like that. And then perp stexes are a huge market. If you look at what silver does on Hyperliquid, I think there was a Friday where silver, when the Iran war broke out, I think the silver pool on Hyperliquid generated something like $40 million in fees in one day, and it was the only pool. So it's not backed by anything. There's no security on it. We think we've got a better offering, and we think we could compete with that. And that's just to show you the scale of the revenue that's on the table if you start to add all those products. On top of that, we do think there's an option to grow our product line long term into the future, maybe combining silver with other elements. So, maybe creating almost like bonds. Would you buy a 10-year US Treasury bond if 15% was in silver? And then you earn, a bit of both, things like that. There's a lot of options we can do long term.
I see. Would you consider also sort of rehypothecation of the physical silver as a form of yield, or this is not a specific discussion?
No, we don't believe in rehypothecation. We think there's a lot of tokenized gold products on the market. They earn their yield by lending out the physical metal to jewelers, to banks, to whoever. So, for example, one option available to us is if we had significant silver and a solar panel came to us, they could lease the silver off us and pay us a yield, and we could pass that on to the token holders. For me, that adds counterparty risk in that if that company then goes bust, how do we get our silver back? Silver is scarce, and like we discussed, it's quite hard to come by. It's not as easy. So then that adds a big risk. But also, if you own my silver token, you have a direct claim on ounces of silver. If that silver is lent out to an EV maker or a solar panel company, then technically your token isn't backed during that period. So I just don't like rehypothecation. I think somebody will get burnt eventually. If there's a bank run on a big gold project and the gold isn't where they say it is, or they can't claw it back, I think it just causes massive problems. And the reason I love crypto, the reason I love Web3, the reason I love Bitcoin and things like that is the trouble with the traditional financial sector is rehypothecation. So introducing it into our products doesn't make us any better than what we already have, in my opinion.
I see. And I think it's a very sober analysis, right? So if you avoid hypothecation, you are decreasing the potential problems that you just might have. So why risking it? What do you think would be the expected yield return, and how this yield return can potentially change according to the size of the market cap and potentially also the market? If you think that there will be a change in, I don't know, bull market vibe versus bear market vibe.
Yeah, so we're targeting between 6 and 8% yield. That is paid in silver though, not cash. So we think that's real yield, or that's what we're going to call it, real yield. We think that's quite attractive. If you look at most of the tokenized gold products on the market, they offer 3.5 to 4% yield. So we're going to be at least 50% ahead of where the gold market is. Of course, when there's volatility in the market, that might allow us to enhance our yield. We also, like you mentioned, there's other ways we can generate yield as we grow. 68% is our target range for our standard product, but there's nothing to say long term we can offer a higher leveraged yield, which is maybe 12 to 14 to 15%, but there's a higher degree of risk involved with that. And then it's up to the individual investor. Do they want to chase higher yield but higher risk, or do they want to settle for low risk and low yield? And this is the benefit of DeFi. This is why DeFi is going to be a multi-trillion-dollar business in the future, is because it offers choice and options to every single investor. They're not stuck with what their bank says. They're not stuck with whatever their preferred partner is. They can go on the market and they can choose their risk tolerance, their yield, and if the yield matches the risk, then they invest. And I think probably an important point to mention is we're already in discussions with Borrow, Lend, and similar products, and that's exactly their thesis. So speaking to Jupiter this week, for example, they've got a really cool product coming very soon, and it's that ethos: is you pick your yield, you pick your risk, and if it matches, then you've got a winner.
Yeah, that's. I think it's definitely something that we lacked a bit in DeFi. But let's say in the last maybe 3 years, I've seen more trenching. So senior trench, junior trench, and so on and so forth. Let's say segmentation of risk, and therefore also exposure of a higher yield or lower yield. It's something we're going to use more and more. There are a lot of things that I think we can potentially predict just studying what TradFi is using for several years. We don't need to reinvent completely the wheel every single time. We should probably keep what is already good and, of course, remove what we don't believe in it.
Of course, and I think you're right as well. Is like term time is going to play a big thing. If you're willing to lock up your silver for 3 years, then do you get a different yield than somebody that doesn't want any lockup? That makes sense. And again, it's just, I think the important thing in DeFi is listening to the market and designing products around what the market's telling you. The good thing is we have hundreds and thousands of data points to work off. And because it is DeFi, because it is permissionless, we can actually work with our customers to create the products they want. So we're already in discussions with a vault partner to design a yield product for their customers. But because we're backed by silver, people are coming to us and saying, oh, that's great. Can you design this product? Can you design a yield product for this? Because there's so few on the market.
I see. And how do you plan to redistribute yield? So it's like, do I need to hold them and do I need to stake? So how would it work? How do you see it unfolding?
Yeah, I think some form of lockup, some form of staking does make sense. I think we'd probably offer two products. We'd probably offer a non-lockup product where you get a lower yield, but if you're willing to lock up for, say, 90 days to start with, then you get a slightly enhanced yield, just because it becomes more predictable as a business. We know that these people are going to take their silver off supply for 90 days. On top of that, I think what's really important to us is that people have the choice. So a non-lockup version makes sense as well. And then the longer term solution is we actually think a lot of our institutional clients, 90 days isn't even a conversation. They're talking about 3 to 5 year hold terms. So it's really designing products around that as well.
Okay, so what would be your then? So your offering would be more B2C, B2B, or a combination of both? Because you just mentioned also institutional clients.
Yeah, I think we can satisfy demand from both customers. I think at small scale we're much more B2C. As we launch and as we grow initially, we're going to be very much the individual investor that wants to invest and have some silver exposure, some RWA exposure. But as we grow, the opportunity for us is a TradFi, institutional capital. We are already in discussions with various regulated issuers across the world. There is huge demand for on-chain real-world assets from TradFi, but there isn't necessarily all the securities and safety nets in place yet. We believe we'll bridge that for silver, and we think that's why being regulated and compliant is so important to us, is so that we can access that capital.
I see. It makes completely sense. And looking a little bit more into the details of the protocol per se. So how mint redemption work today and how it will work in the future? So how do you see, because this is obviously one of the most, let's say, hairy topic for any real world assets on chain and also any commodity that has been tokenized.
Yeah, sure. So we will host a mint and redeem on our website. So you'll go to the website, you can mint the token, you'll be able to see how many tokens are in supply versus how many ounces of silver we have. You'll be able to buy the token which mints new tokens, and you'll be able to redeem it first just for cash, so USDC. So you'll be able to redeem any silver tokens for USDC at our website. Of course, there will be a secondary market, so most people will probably just go to the secondary market to sell, but you do have the option, the backup of coming to us to redeem. Long term, that will be flipped, so you will be able to redeem for physical silver in the future, subject to KYC, AML checks, and obviously we do need to iron out some of the regional issues. If you're in Thailand and the metal's in Canada, what jurisdictional requirements do we need to go through to get you the metal? But long term, we will offer physical redemption as well.
Yeah. Yeah, because as we were saying before, actually, it is not, although there are a lot of issuers also in the gold world, the redemption is not that easy. So with Pax Gold, redemption is above $2 million as of today. So it's possible, but of course you need to have quite a bit of gold. Cash redemption is possible, okay. For Tether, I think it's you need to go specifically in Switzerland to have redemption. So it's not, let's say, it's ultra straightforward per se.
Yeah. No, we don't envisage that massive physical redemptions will ever be a thing, but we will offer it anyway because it's important. If you buy a physical asset, you want the ability to one day call upon that asset if you want it.
Yeah, that makes sense. Yeah. There are a lot of people that really are, gold bag or silver bag, so they need to have it also some part,
Exactly.
House, really. Okay, and I was reading about this premium on silver. So I think that you will be charging a premium. When are you going to charge it? You're going to charge it when you mint it? At what point in time?
Yeah, so our mint price of the token will be slightly above spot price, but the token will trade at that on the secondary market. So it's not a one-time fee. You don't pay it and then immediately lose the money. Ours, right now, we've pegged it at 10%, and that covers the insurance, the cost, the vaulting, all that, but it's a one-time fee. So with most of these premiums, you pay it and then you pay insurance ongoing. But we think, that covers the premium. And like I said, some of the premiums worldwide, even in China today, I was reading, I think their silver is trading about $30 to $40 above spot. Which makes it about 45% premium. You get instant access and it's verifiable, so we think that's fair.
Okay, so you would say that this 10% premium is fair because obviously it does usually require some premium in general when you're buying it, to holding it, to store it, to insure it, and so on and so forth. And in general, you basically never buy at spot price, basically. That's one of the rationale behind it.
Yeah, like anyone out there tries to buy physical silver and take delivery of it, you can't buy it spot. JP Morgan probably can't even buy it spot silver physical. It just doesn't exist. It's a complete issue with the silver market. And maybe that's why the reasons why there's so few tokenized silver projects is because nobody's been able to communicate and confirm how they tackle that issue.
Yeah, what do you think would be, what are the main reason about the tokenization of silver lagging? I think you just mentioned one during our conversation, but well, I think it can be one of the reasons. So storage. So you need much more space to store silver. So 1 million of silver is different than 1 million of gold in terms of size, right? Do you think it is one of the reasons, or there might be other reasons?
Yeah, I think there's a few reasons. I think access to supply is a big one. You know, it's not as easy to just go and buy $1 million worth of silver, whereas you could probably buy $1 million worth of gold pretty easily today. I think the premiums cause real issues. Silver is also treated differently in different regions. So silver, for example, in the UK isn't treated as an investment asset. So you pay VAT on it, whereas you don't with gold. I also think a lot of the focus has been on gold. For me, gold and Bitcoin kind of go hand in hand. I think silver has huge demand, and I think people have maybe been a bit slow to adapt to that. You're right, storage, obviously, silver needs a lot more storage. I also think as commodities grow, we will see a lot more commodities, but I think anyone that's tried to do tokenized silver have just done ETFs or trackers and things like that. They've not actually properly tackled the physical element of it.
I see. All right. Now I think let's move to another interesting topic that is more the legal architecture, right? And potentially survival architecture, because this is where a lot of projects might not really, communicate everything or might have some shortfalls. So what is the current legal architecture and the future legal architecture that you have in mind for owning silver, and most of all to make sure that the redemption of silver will be available even in a case of, for example, bankruptcy?
Yeah, sure. So right now, this is one thing we are working on. So a lot of people will know, but we are working on merging with a public company to be a publicly listed entity in Canada. So we would actually be part of a public traded stock on the Canadian Stock Exchange, which is obviously something quite unique. But yeah, you're right. I think having some form of SPV that sits with the physical silver, bankruptcy remote from the wider company, is super important, so that even if there was financial issues or something went wrong with the holding company or the big company, it never gets down to the physical silver, and the physical silver never has to be paid back to any creditors. That means that the token is then backed one-to-one by the physical silver at all times. We then see, a separate SPV that issues a token, someone out of Cayman or BVI, but we are going to lean heavily on regulated issuers around the world to issue the token to regulated investors. So we can issue the token on Solana dexes and Meteora and things like that, but we want to be able to target accredited and sophisticated investors. And to do that, we are going to use regulated platforms to help with that. People like Anchorage, Tokenized, and various others.
Okay, so you are hypothesizing also the possibility to have another token that would be essentially the most compliant version for institutional players.
So yeah, it would be the same token. We would just it would be the same token. We just offer it to regulated clients via a specific KYC AML platform.
I see. And in terms of, let's say, dividing the ownership of the silver per se, in this case, from the ownership of the company, right? So I think that we have seen several approach. I think Paxos use a trust. Okay, they experimented with several. I think Tether Gold use an external custodian. Therefore, there is a little bit of a triage there, and many other issuers use mostly an orphaned SPV. What would be, in your opinion, the structure that fits best dominion and regulatory compliance for your clients in the future?
Yeah, I think right now we are exploring third-party custodians. So we are in talks with Anchorage Digital and Zodia. I think there's two sides to it. One, not only do they help and obviously are regulated, but also they just give that that trust element to institutional investors. Institutional investors are aware of them. They know where they're regulated. They know where they bank. Anchorage Digital, for example, have a federal account with the US Fed. So it just gives them that confidence that everything is taken care of, everything's legit, and everything's secure. So I think third-party custodians aren't necessary, but I do think they add some benefits when you're talking to institutional clients.
Yeah, for sure. It's trust creation, right? That's for sure. What would be the custodian holding? So specifically, it's not going to hold the silver, or yes?
No, it would manage the funds, the treasury wallet, and the tokens itself. The physical silver, the physical metal, will be held by Brinks via an SPV.
Okay. All right. So you're going, I think the majority of the tokenized commodity actually are on Ethereum, but you decided to launch on Solana. So did you see in it, a great opportunity? So what are the decisions behind designing Solana over the whole EVM world, for now at least?
Yeah, I think there's a few things. I think my background, I've probably got a big network in Solana, and I could see what's coming for Solana. Solana are making a huge push into internet capital markets, institutional regulated products. Solana Foundation is making a massive effort to engage with regulators across the world and actually bring strong quality RWAs on chain. We've met with the Solana Policy Institute. They're really campaigning against regulators to try and help aid the on-chain movement. But on top of that, I think Solana's got some of the best tech. If you look at Meteora, if you look at Jupiter, if you look at Solflare, like they're all doing innovative things. And I think the entire ecosystem is just like a hive of activity right now, which is super exciting to be part of. You've got super teams. Even, I'm not sure how many people are aware, but there's a House of Sol in London is tackling the institutional side for Solana. Every event's oversubscribed. You've got HSBC, Kraken Institutional, BNY, EY, all these massive organizations attending, and you literally can barely get in the door. So we're attending one in a few weeks with Spyco, who are one of the biggest token issuers in Europe. The things that Solana have got coming, it's almost that age-old phrase in crypto is slowly, then all of a sudden. It feels like they're really building the framework right now, and eventually they're just going light the fire, and it's going to absolutely explode. They've got so much coming, and it's all aimed at bringing institutions on chain.
That makes sense. For SILV as a DeFi primitive, what type of integration would you like to see, in the near future in the Solana ecosystem?
In terms of integration, I think definitely working with vault partners is going to be a huge focus for us. I think vaults are going to be the key to unlocking RWAs at scale. You look at what Camino's doing, some of the TVL that they're growing, some of the LP partners as well. You've got Turtle Club, you've got, we were speaking to one today, Liquidity Lend out of Australia. They all see massive demand on the Solana space. Ease of access is really huge on Solana as well. Like I said before, we're also going to be working with Jupiter and Jupiter Lend. And we think that they've got a really interesting product coming in the next few weeks, which will lend itself very well to things like tokenized silver. Long term, what people will see is more integration with ourselves and the super team groups. We've already been at a few events. We were at an event last week with Solana Foundation and Super Team. We're attending another one in the next couple of weeks. And I think we want to be almost like the poster child of tokenized commodities and tokenized silver for Solana. We think we can bring a lot of users and capital onto the Solana chain. And it's great to see that we're getting supported by the Solana Foundation in particular and the Solana Policy Institute.
That's very cool. And probably you will also, be integrated in Meteora, I guess, at launch. I think it is on the roadmap already, right?
Yeah, again, when we talk about tech, I just think Solana is a bit of a step ahead. I think EVM's got the majority of TVL and capital right now. But yeah, Meteora, from day one, when we first designed the product, Meteora was in the forefront of our concentrated liquidity, how easy it is to set up, how easy it is to manage liquidity. They've got an Alpha Vault product. They've just created some permissionless products. Meteora are constantly innovating. I think literally from day one, they were part of our roadmap. Meteora was also a big part of everything we did when I worked at Swissborg and BorgPad. So know the team well. I know Soju's in touch with our team as well. So yeah, Meteora is a massive focus for us.
Sounds good. I think in particular for the dynamic fee AMM, I guess. So that's probably one of the most interesting peculiarity about Meteora, at least for what I know.
Yeah, 100%. They've designed They've designed their concentrated liquidity in order for teams and founders to really capitalize and make as much revenue from while making it as accessible to everyone. But we're also going to partner with a company called HawkFi. HawkFi manage the rebalancing of liquidity for you, which is super important. Obviously, for a pegged asset, you need to make sure that people can trade it up and down, but that it moves with silver price. Normally, when you're launching a token, all you care about is buy and sell side. We have to care about buy, sell side, and what silver in the real world's doing. So it adds complexity. So we think Meteora, concentrated liquidity, combined with HawkFi, is going to be very special, and how we're going to generate the fees that we pay back to holders of the token.
Okay, that's another important point. I think you were touching on also the back stability, connected connected with of course, the price of silver.
Yeah, definitely. We use a price feed from Pyth. Pyth are one of the only people that actually have a silver price feed out of all the oracles, and it's renowned. Anyone knows Pyth. On top of that, we've got a company called Shift Technologies who have designed arbitrage bot to keep the price pegged as tight as possible to silver. We will, of course, allow a little bit of drift. We're just finalizing those details, but the price should be as close as possible to spot silver, obviously including the premium. And yeah, we're super excited because we're not only launching a silver token, we're actually building a full tech stack for tokenized metals, which hopefully can be replicated and used for other metals down the line.
I see. Well, I think that we have been discussing quite a bit about, Dominion, seed token, the expansion, the launch on Solana, and so on and so forth. But now I would like with you to zoom out a little bit and ask you, what is your honest take on real world assets? So is there anything that is particularly exciting for you? Is there anything that is particularly wrong for you?
Let's start with the negative and then we'll go to the positive. So what I think the major issue with RWAs right now is whether they have the underlying asset. And I think there's still question marks over certain products on the market. How tied your token is to the RWA. And I think that's an issue that everybody needs to solve. And the more people that solve it, the better it gets for the entire space. The second issue with RWAs is a lot of people want to rush out and issue a governance token or a platform token. So we could have issued a Dominion token, but how does the Dominion token relate to silver? It doesn't really. And what normally happens is if you hold the Dominion token, transferring that value to and from becomes very difficult. So I think that's the two issues, but I think there is people trying to solve both those issues as we speak. We mentioned, Chainlink, we mentioned Hive, and I think just ensuring you understand what you own is super important with RWAs. In terms of the positives, I think RWAs are almost a Trojan horse. I think RWAs is how we bring institutional capital on chain, but also how we bring the average person on chain with as little risk as possible. There is no such thing as zero risk in life, but if you buy an asset backed by an asset you trust, that's different. And I think that's where RWAs are ahead of the average crypto project. RWAs also offer a unique opportunity. I think what we've saw over the last 4 or 5 years is there's a lot of projects out there, tokens that really have no cash flow, no revenue plan, no business plan, no long-term vision. And really, they bet on the fact that every 4 years the market pumps and they make money. I think those cycles are done. And I think the crypto market is understanding that to make money and invest in, you need products that are backed by real things, revenue, real world assets, whatever it is, but also provide yield. And I think yield is a massive differentiator between why people would invest and not invest. I think yield for many years in crypto was probably looked down upon by the average crypto investor because you don't care about 7 or 8% if you buy a token that can 100x in a few months. I think the market's kind of grown up and shifting. And I think RWAs epitomize the move from speculation to adoption. And I think we're in the adoption phase, or we're slowly going into the adoption phase where people are buying assets to hold them, to believe in them long term, not just to buy them, hoping to flip it in a couple of weeks for 10x. That's my take on RWAs. I think the RWA space is going to grow 3-4x this year. I think we'll be closer to 100 billion TVL this year. And I think there's some really strong products coming.
I'm completely with you. I think that a lot of people are losing, let's say, the dopamine of the DeFi. So it's a little bit less exciting. It's not this constant high. But on the other hand, we're also entering, as you say, in more in the adoption phase, where real use case are really paving the way of adoptions and
Yeah.
improvement.
I think to that point though, and you'll know this as well as a lot of people will know this, when you speak to someone outside of Web3, if you tell them an asset pays 15 to 20% yield, they literally think it's a scam. They instantly switch off. So I think that dopamine hit from DeFi disappearing is actually a positive for institutional capital to come in, because when something's 6%, 8%, they can get their head around it, they can understand it, and they realize that there's not a huge amount of risk. And that's how we onboard the next hundreds of millions of people into crypto, is through low risk backed hard assets. I think that's definitely key.
I mean, I'm completely with you. I believe that 95% of the financial assets or more will be on chain. So I am completely aligned with several, institutions like Citadel or many other TradFi, and say that we're going to have between 3 to 10 trillion of assets in the next 4 or 5 years. So I think that this is an enormous opportunity. Just I think that blockchain technology is a better plumbing for financial assets, and this is going to be an obvious choice.
Yeah, I think the one thing we've not touched on is that we're moving into an AI dominated world. We're basically going through the biggest industrial revolution we've ever seen, and everything is going to be digital in the future. So we talk about tokenization right now, but in the future it'll just be how you buy assets. There won't be a talk of tokenization. AI agents will do most of your buying, most of your selling, most of your portfolio rebalancing. If an asset isn't on chain, they won't be able to buy it because they're not going to use cash or credit card. They're going to buy it on chain. So I think this tokenization move is just part of the reshaping of the global economy. AI, blockchain, crypto, it all goes hand in hand, and it's just transforming us through this industrial revolution.
I see. For sure, right? I see how the agentic economy will play a better role with tokenized assets all over the world, right? Looking at the future, how do you see tokenized commodities heading? So how are they going to evolve, and how are they going to change, if anything?
Yeah, I think we'll see growth in that area. I think Hyperliquid's kind of demonstrated that there is demand for 24/7 access to oil, gold, silver, whatever it is. I think commodities have been really slow, which is strange to me because I feel like on-chain private credit, on-chain T-bills and things like that, I didn't think they would be quicker than commodities. But I think commodities will play their role. I think if you look at not just institutions and family offices, but if you want access around the world, you look at the developing world, stablecoin adoption's fastest in the developing world because they understand fiat debasement. Well, they're slowly going to understand that the US dollar is depreciating just as fast. So I think we'll see growth in tokenized commodities in the developing world as well. I think in the next couple of years, every asset's going to be on chain. I think you'll see on chain copper. I think there's already a uranium play. I think platinum, palladium, zinc, nickel, all these products are coming. I think the big stumbling block right now is the non-digital world. So the miners, the producers, the refineries don't really fully have their head around tokenization. But all it takes is a few to understand it, and then that paves the way. And at the same time, we're going through a big wealth transfer. So the old guys are retiring, younger people are coming in to take over these companies, and they understand what tokenization means. So I think we're at a real inflection point where everything's coming together at the one time.
Very cool. And what are the most important milestones for Dominion in the next future?
Yeah, sure. So we are launching our token launch at the end of May. So the silver token will be live on the 26th of May. We've already bought our first batch of silver. We plan to buy more silver over the coming months. So really, the first launch is super exciting. That's what we are looking forward to, selling out the first 40K in our Alpha Vault. I think that's the first step. The next step is to grow that AUM and sell the token, distribute rewards, and grow the holder base. I'm a firm believer in distribution's key. So we're going to have some rules around how much people can buy to give as many people exposure as possible. And then from there, the next stage is scaling. We have huge institutional clients, but we just need to scale in order to have the metal in place, start establishing the workflows with Brinks, Chainlink, and all the key stakeholders.
I see. And how can people remain in touch with you or potentially participate in the public sale that you are going to host, I think, end of May, right?
Yeah, so the public sale, you can register your wallet. It's going to be whitelisted. So register your wallet at dominion.market/launch. If you go to that website, you can register your wallet. You can also indicate how much you're willing to purchase on the day. We do have a pre-buy option, but you need to come direct to me for that. So you can join our Telegram community. The link is at dominion.market/launch. Check out our Telegram. And if you want to pre-buy ahead of the launch, contact me. We've already got a few people that have taken us up on that offer because the launch is going to be first come, first served. If you pre-buy, then obviously you're guaranteed an allocation. Alternatively, just get us on Twitter. We are Dominion_market. And all the links will be on Twitter for you to take part.
That's super cool. We'll put all the links and the references in the comments, so there will be no possibility to make mistakes and it will be easy to get in touch with you. Is there anything else, Mark, that you want to share about Dominion, about your journey, or anything else, or any possibility for partnership with you guys?
Yeah, any partnerships, people should just get in touch. We are super open to having conversations. We believe we're going to scale pretty fast after this pilot launch. We are doing some interesting things that nobody else is doing. So not only are you buying silver exposure, you are buying the first tokenized silver product on Solana, which we think is super interesting. There is some rewards that we'll be sharing at the end of 30 days as well for anyone that buys on the launch day. And stay tuned because we've got a lot of big announcements coming. But I would just urge everybody to check out our socials, join our Telegram, and stay up to date with what we're doing.
Amazing, Mark. Well, thanks for the beautiful chat together. It has been ultra enjoyable, and I learned a lot of new things about silver and tokenization. So I'm really excited to see these many trillions of financial assets coming on chain, and in particular seeing commodities with a special eye for silver that, as you know, it's one of my main investment in that area. Thanks again for your time and looking forward to the launch.
Yeah, thanks for having me.